We're talking about the energy transition, probably one of the most important phases in our society and economies. Why are electricity costs going up in some parts of the country? Will it continue to go up? And how will this transition affect everybody, not just investors, but everybody who's connected to a grid? We're talking about this with our next guest, Robert Bryce, who's an expert on the subject. He's a journalist, author, filmmaker who writes primarily on energy related issues. His Substack has over 12,000 followers. Be sure to check that out. Link in the description down below. And he's published a number of books. The latest is called A Question of Power, Electricity and the Wealth of Nations. And his film Juice, How Electricity Explains the World was released in 2020. Robert, welcome to the show. Good to see you.
Thanks for having me, David.
What would you say are the biggest challenges facing America's grid right now?
Well, I think the first one is reliability. What we're seeing all over across the country are warnings from the grid operators that there's not enough power available. Add in this new demand from data centers, the shuttering of existing power plants, thermal plants, coal plants, and natural gas plants, et cetera. And I think it's clearly that we're going to have enough juice to go around. I think the other one right after that, though, David, is affordability, because one of the things that motivates me in my work is affordable energy and power. Expensive energy is the enemy of the poor. And so what we see, particularly in states like California, where electricity rates are skyrocketing, this acts as a regressive tax. So, in the U.S. right now, it's definitely going to be resilience, reliability, affordability. And then right after that, I think it's land use, because we're seeing these land use conflicts all across the U.S. and you're seeing them in Canada as well.
Let's break this conversation down
Sure.
into different use cases of electricity. Starting with electric vehicles, it's been critics of EV have said that the rise of EVs will cause the grid to overload. There won't be enough electricity during peak hours. Costs may go up. You see pictures of Teslas at charging stations lining up for hours in some extreme cases. What's
Sure.
your assessment of whether or not the grid currently can handle a surge in EV demand or usage over the next coming years?
Sure. Well, let me start by just pointing out I've been a long time skeptic about electric vehicles. My view is they're the next big thing, and they always will be. These are, this technology is not new, not by any stretch of the imagination. Electric vehicles were around in Thomas Edison's day. So why still, after more than a century in the marketplace, are they still only garnering single digit percentages of new car sales? It's because, generally speaking, consumers find they're not the vehicle that they want to buy. They're not flexible enough for them. They don't have, long enough range, and they're too expensive. So we're seeing a dramatic cooling of both the hype around EVs and also the sales numbers are faltering. And I've written about this on my Substack, robertbryce.substack.com. Ford Motor Company is losing, in the second quarter, lost almost $50,000 for every EV they sold. So let's start there in terms of what the future of EVs is. But in terms of how they impact the grid, this is a key question, because again, when it comes to the issue of costs and grid reliability, I'm very concerned about the impact on the poor and the middle class. So who's buying Teslas? Who's buying electric vehicles? It's mainly rich people. So what we're seeing with the grid and the deployment of EV charging stations for the public, et cetera, is in fact a kind of a cost transfer from where wealthy people with EVs are benefiting from costs that are imposed on all ratepayers to build out this EV charging infrastructure. And then finally, you're right about the resilience and the demand on the grid. If you have, I live in Austin, Texas. If all the people on my block have an EV, it's going to overload the local grid, and that's going to require upgrades of the transformers, maybe the power lines, et cetera. So it's a multi-dimensional issue with issues around class, but also around, just the viability of the grid itself to serve that much energy demand. We forget how much energy we consume in the form of gasoline and diesel fuel.
When you say EVs are unlikely to reach mass adoption, at least in the on the affordability scale,
Sure.
what do you mean by that? Because right now we're seeing basically every single auto manufacturer shifting towards EV either by choice or by mandate.
Well, and they have made those headlines and they've said that, but I think also you've seen just in the last few weeks, David, where let's look at Ford. They recently announced that in fact they're going to expand their truck plant in Canada. Why? Because that's where they make their money. And so they're going to be slowing down some of their EV rollouts. General Motors, Mary Barra said the same thing last month. We've heard the same thing from the Europeans, from Mercedes, from Porsche, et cetera, saying, well, we had these projections where that we were going to quit making internal combustion engine vehicles. And now they're dialing that back because the consumer demand has not been what they expected.
This is an article dated June 6th. The article states that there's a decline in consumer interest in purchasing EVs. Only 18% of US adults say they would be very likely or likely to buy a new or used EV, down from 23% last year. What's contributing to this slowing interest in EVs? Is it the cost? Is it the convenience of owning an EV? Is it all of the above, something else?
Well, I think it's all of the above, no doubt about it. And I think higher interest rates are contributing as well, David. Where consumers are going out to buy a vehicle, and the more expensive the vehicle, if you have a high interest rate, then that's going to force the purchase price or the carrying cost of that vehicle up higher. But I think Ford, when as I mentioned earlier, their EV unit sales are growing. They were up 61% from the second quarter of 2023, but they still lost over 1.1 billion in the quarter. They're on track to lose $5 billion this year on their EV sales. So, and that's just Ford. And they break those numbers out. So, the automakers are looking at this, I think, with a very clear eye. There was a lot of hype, no doubt about it, but I think that they're having to dial this back because there's the demand simply hasn't been as robust as they thought it would be.
EV batteries, where are they coming from? Are manufacturers like Ford and GM making them in-house?
Well, they're starting to, but this is another key point. And I had a piece, in fact, in the Financial Post there in Canada in June talking about this very issue. And this is the part that, to me, from a geopolitical standpoint, and it's not a partisan statement here. I don't, I'm a reporter. I'm not a Republican. I'm not a Democrat. I'm disgusted. But for the U.S. and for Canadian automakers, this is really key because the supply chains for all the critical elements in EVs are dominated by the Chinese government, or Chinese firms rather, and particularly neodymium iron boron magnets. These are the key high coercivity magnets in EVs, as well as wind turbines and a lot of other consumer goods. But this is the part that I don't understand. Why are the Canadians and the Americans in terms of the governments so eager to make their auto sector dependent on Chinese supply chains? I just don't understand it.
Well, perhaps there isn't an incentive to remine some of the elements or materials domestically in the nation.
Sure. No, and that's a key point. It's that the mining of particularly rare earth elements, neodymium, praseodymium, dysprosium, terbium. These are critical and rare earth elements, and China dominates all of them. And this has been something that the Chinese government has made clear now for 30 years. Deng Xiaoping said in the 1990s, the Mideast has oil, we have rare earths, we're going to take advantage of them. But the IEA has issued several reports on this, pointing out that whether it's the anodes, the cathodes, the batteries, the magnets, China has this near monopoly on all of those things. So I'm not bashing China. China's going to take care of China, but they are dominating electric vehicles for a number of reasons, and one is that they want to use less oil. So they're able to, if you can run your EV on coal and coal-fired power plants, that's a way to reduce your dependence on imported oil, and that's what China has done.
Okay, so bottom line,
Yeah.
many jurisdictions in the U.S. have a zero emissions target by a set year, I think
Sure.
2035. Zero carbon by 2050, I think, is what the Biden administration said last I checked. Assuming industries are on track, if not trying to meet these mandates, what is that going to do to our grid? How are our lives going to change?
Well, I think these net zero targets are just simply undoable. It won't work because it can't work. There's just simply no way for the U.S. to reach zero carbon emissions in just 25 years. It just can't happen. The scale of our energy consumption is so large.
All right, what if you were the head of the U.S. Department of Energy and someone had put a gun to your head and said, you have to design a way to make this work? How would you do it?
Okay, well, if they appointed me, I would resign. But nevertheless, let's assume, because it's a very bad decision to put me in charge of anything. But anyway, if you made me the head of the energy department, well, the first thing I would do would be say we have to deploy nuclear at scale, and we have to get busy right now because we've dilly-dallied way too long. Now, that's not going to be an immediate fix. The U.S. nuclear sector didn't wither in a year or two. It withered over, of course, decades. And the U.S. is making progress. Before we started talking, I made the point that Canada I think, is leading the world now, will lead the world in the nuclear renaissance. But if I were in charge of energy policy in the U.S., the first thing I would do would be to say we have to deploy more nuclear power plants, and we have to do it at scale, and we have to do it ASAP. But even if you did that, it will take 10 or 20 years to really develop that scale of nuclear energy that's going to be required to make a major dent both in electricity generation and overall decarbonization in the United States. But I say that because the utility sector, the utility areas, that's the easiest part to decarbonize, right? Transportation is really hard, and so is industry.
Is there any other renewable energy source that could provide reliable base load in terms of energy output, but still be clean?
Okay, so I know you call them renewables. I've quit calling them renewables. I call it alternative energy.
All right, why aren't they renewable?
Well, my friend Jesse Alsobel makes this great point that wind and solar may be renewable, but they are not green. So what I have seen over years, these use of these terms, or rather green energy, clean energy, renewable, these are marketing terms.
Sure.
But the reality is that wind and solar are alternative forms of energy to what we use as conventional forms of energy: coal, oil, natural gas, nuclear. These are what I call conventional forms of power generation. Or energy consumption. So we've been experiencing a really very effective marketing campaign. So as far as what's reliable, well, I have solar panels on the roof of my house, but there are places where alternative energy makes a lot of sense. But I am very skeptical and a longtime critic of the rollout of solar and wind because of the land use requirements, and that's something that you're seeing in Canada and was happening all across the U.S.
So let's take a look at how you think the energy transition could look like. Currently, this is from the EIA website, U.S.
Sure.
utility scale electricity generation by source in 2023. Natural gas, well, fossil fuels in total is 60%. Nuclear is 18.6. What they call renewables, I guess, alternatives in your words, wind, hydropower, solar, and so on and so forth. The remaining 21% and other sources negligible. Okay,
Sure.
do you see this makeup changing in the next 10 years?
Well, I think wind and solar are going to continue to grow. I think solar will continue growing faster because of, partly the subsidies, I think, are slightly more lucrative. And further, the power density of solar is better, about 10 times better than that of wind. Plus, you're seeing the backlash against wind has been, I think, very much more pronounced than the backlash against solar. So here in the U.S., you've seen solar deployments accelerating and wind deployments decelerating over the last few years. So wind is very unpopular across rural America, across rural Canada. There was, in fact, a very contentious meeting in New Brunswick that was on the CBC the other day with about 100 people showing up to oppose a wind project and only one local person speaking in favor, and effectively all the rest saying they were opposed. But I thought just a couple of quick points on that energy mix. Nuclear has been flat in the U.S. for decades. What has really grown is natural gas. And so we're now generating about 43% of U.S. power. It comes from natural gas, which is more than double what it was when my first book was published on Enron. And remember, Enron was a great promoter of gas-fired generation because it allowed them to get into both gas trading and power trading.
I like to talk about how AI could change energy demand. So this is, you brought this up early in the conversation. This is an article that was written a few months ago when NVIDIA just released the Blackwell GPU.
Right.
This particular author at Tech Radar is calling it a doomsday device.
Right.
So basically, he's saying his argument here is that the latest GPU cluster, which comes at 8 GPUs, pulls in 15,000 watts of power. 1 million Blackwell GPUs would suck down an astonishing 1.875 gigawatts of power. For context, a typical nuclear power plant only produces 1 gigawatt of power. This is according to his calculations, not mine. Assuming they're right, what does this mean?
Well, there's a ton of focus on this now. And I'll just make one quick point. Coal in the last slide that you brought up, coal provides 16% of the generation in the US. under the rules that were recently put in place by the Environmental Protection Agency, or published rather in the Federal Register, those coal plants would have to shut down by 2032. Well, that's almost tomorrow in the utility sector, right? Because as you know, these are very long-lived assets, and the co-ops, public power, investor-owned utilities all have to plan a decade or even 2 decades ahead. So there's a collision that is starting in the United States where we're seeing these forced closures, early retirements of these coal plants, and that's 16%, by the way, is the amount of generation. It's about 700 terawatt hours. Coal plants in the U.S. now produce more electricity per year than wind and solar combined. So that fraction has been declining. Coal's share in the market has been declining, but it's still an enormous amount of generation. So we're seeing this expectation of a forced closure of these coal plants, this massive new demand from AI and data centers, as well as electric vehicles, heat pumps, electrify everything. All of this is going to, come to a head. Now, what will be the likely outcome? I think I only see one logical way forward, and that's going to be to burn a lot more natural gas. And in fact, you see big tech companies like Microsoft in San Jose, they're building 120 megawatts of backup power capacity through with a cooperation with a company called Enchanted Rock out of Houston. They're going to supply the data center if the grid goes down, but they're also going to be playing into the power market in the California Independent System Operator. So the big tech is, I think, very clearly seeing that gas and nuclear. You see what Amazon is doing with Talon Energy in the Susquehanna nuclear plant, but they're clearly realizing they can't power these data centers and all this AI demand with wind and solar.
So basically, if we don't have an energy transition soon, is the nation going to face some sort of energy crisis?
Well, let me argue with your idea about the energy transition, because what was interesting to me, I've written about this a lot, and that when I look at the numbers, I don't see any energy transition happening. What we're seeing with the idea of the energy transition, I think, again, is a very effective marketing campaign. Let's go back to the electricity demand change. In 2023, the growth of gas-fired generation in the United States grew 9 times faster than wind and solar combined. So where's the energy transition? Yes, we're transitioning away from coal and toward gas, but it's not just toward, to alternative energy. And that's very much the case in India and China. Power demand in India is expected to grow 8% this year. Well, you use the rule of 72. That means power demand in India is doubling every 9 years. I mean, it's just a staggering rate of growth. And how are they meeting that power demand growth? It's largely with coal. And the same story is the case in China. Look at Vietnam, Indonesia, et cetera. These countries are building, they have massive new power demand numbers. And a lot of that new demand is being met with coal-fired power plants.
Are you noticing a relationship between where a nation is in its industrialization cycle and the type of energy sources that they're primarily relying on?
Well, sure. I mean, you look at the U.S. over time. How did the U.S. industrialize? It was all with coal, right? That was the Industrial Revolution was fueled by coal. We went up the energy ladder from wheat straw and grass to wood, and then to coal, and then we started using oil. Now we're using natural gas. Eventually, we're going to use more nuclear. Yes, weather-dependent generation, alternative energy, solar and wind are going to grow. But if we're really serious, and I've made this point many, many times, I've been making the same point for more than 15 years now. If we're serious about decarbonization, the future is clear. It's end to end, natural gas to nuclear. These are the sources of electricity production that we know can scale. They're low or no carbon. The technologies are well developed. Natural gas resources globally are not just abundant, they're super abundant. So I think that the course that we should be setting is very obvious, but the political incentives are not necessarily aligned with that, with end to end at all.
So electrification is one theme, EVs, right? AI.
Sure.
Let's just talk about AI some more. This is an article from the New York Times in 2023. AI could soon need as much electricity as an entire country. I'm not going to read the entire article, but just the first paragraph here. OpenAI's ChatGPT exploded, estimated 100 million users, and in coming years, they could consume immense amounts of electricity. Someone's probably done the math on this. I don't know if the math has changed since 2023 when this article came out, but generally speaking, Robert, given that we need more electricity get from AI or EVs or just the electrification of things, zero emissions targets, so on and so forth. How is a nation going to meet these targets is my question.
Well, I think the availability, and I've followed the AI discussion and I talk about it. I do a lot of public speaking. I was in Canada, in fact, a few weeks ago for two different speaking engagements, and I discuss AI in every speaking engagement. I mean, you look at what's happened with Google; their power demand has doubled, I believe, since 2019, and their CO2 emissions have gone up 4x since 2017. So, I think the big tech companies are realizing there's no way that they can meet the demand that they're facing for AI with alternative energy. So they're going to have to use natural gas or they're going to have to use nuclear. Um, but I think that the availability of power is clearly going to be one of the binding constraints on the rollout of these data centers. And anecdotally, what I've heard in my travel, and I travel a lot, shortages of linemen, shortages of electricians, welders, pipe fitters. In fact, I was in Virginia Beach about a month ago, and the topic was data centers. And there was an engineer from one of the power companies, and he said, "Look, we don't need engineers. We can train the engineers, but what do we really need? We need electricians. We need pipe fitters. We need welders. We need people who can lay cable. We need people who can do some of the blue collar work." So, I guess my broad statement is whether it's AI or whether electrification, people need to understand that there are limits on the ability of the system to grow. And in the US, the system is already enormous. We have 1.3 terawatts of installed generation capacity. That's 1,300 gigawatts. It's just enormous. So systems this big just don't change overnight. It takes years and maybe even decades.
Shifting gears now, let's talk about
Sure.
energy costs. So, California, you brought up California to me offline. This is an
Yeah.
article from Solar Reviews, why California electricity bills are so high and what you can do about it. So, in 2024, says here the average electricity bill in California is $186, which is over 29% higher than the average US residential bill of $144. How did this happen, Robert?
Well, this is a story of bad policy. What you had in 2008 was the governor of California, Arnold Schwarzenegger, mandating, I think at that time it was a third of the electricity in California had to come from renewable sources. Well, since then, what have happened, what we've seen happen is solar and wind have dramatically increased their share of the power generation mix in California. They went from about 3% to almost 26%. In fact, I wrote about this on my Substack in a piece called Kamala America, question mark. So we saw a massive increase in the use of alternative energy. But over that same time period, we also saw that residential prices for power in California went up more in absolute terms than any other state in America. They went up by 15 cents a kilowatt hour. They've also risen more on a percentage basis. And meanwhile, electricity use in California is falling. Well, falling power demand is indicative of a stalling economy. Growing economies use more electricity, shrinking economies use less. And then one last point, the residential prices in California are far higher than in the rest of the U.S. Bureau of Labor Statistics in San Diego today, power costs for residential customers is about 42 cents. It's almost 2.5 times the national average. So this is all regressive. It's all terrible for the poor and the middle class in California, which is a state that has the highest poverty rate in America.
Are we running out of fossil fuels though? So let's take a look at this is from Donald Trump's interview with Elon Musk. This is a soundbite on energy. Just take a listen to the last part here. I'll play 30
Yeah.
seconds of it.
That's
Yeah.
bigger, or they think it could be bigger than Saudi Arabia in Alaska. Could be bigger than Saudi Arabia. But they went in and they terminated it. And I'll get it going very quickly because not only is it big for Alaska, I mean, you talk about economic development, that for the United States, I mean, that is, they say bigger than Saudi Arabia or the same size, and pure, really good stuff. And, they end it. So I think we have, perhaps hundreds of years left. Nobody really knows. But during that time, something will come around that will be very good.
Yeah. Well, I mean,
Okay, so he's commenting on
Yeah.
Alaska having potentially bigger oil reserves than Saudi Arabia. Hundreds of years left of fossil fuel reserve. Nobody knows. That's his quote. What's your response?
Okay, so oil and gas, are we running out? This has been the question for a long time, and we've heard many, predictions about peak oil. Just last week, the U.S. hit a new record of oil production, 13.4 million barrels. It's remarkable. And are we approaching peak oil? I don't know. But what I do know is that the more oil we find, the more oil we find. The more gas we find, the more gas we find. Let me give you one quick number. I told you I was in Calgary and I was in British Columbia giving some doing some speaking engagements. Canada right now, you live in Canada, there are what, 40 million Canadians, something like this. It's a massive country, right? The land area is enormous. You produce about 18 billion cubic feet a day of natural gas. In the Permian Basin, which is mainly in Texas and partly in New Mexico, natural gas production is 18 billion cubic feet per day. And there's not a single natural gas rig running in the Permian. So the amount of hydrocarbons that are being produced in the U.S., because largely of technological advancement, private ownership of mineral rights, and the continuing improvement of horizontal drilling, hydraulic fracturing, and better targeting of shale gas and shale oil. It's just incredible what's happened. So, is there a finite amount of oil and gas on the planet? Yes, of course, because the planet is finite. But the more we find, the more we find. So we are a long, long way from the end of the hydrocarbon era.
Presidential candidates have been asked about what they plan to do with inflation, right? Part of inflation comes from gas. Part of gas comes from the fact that gas at the pump has been expensive.
Right.
And different candidates have different solutions. Trump's solution is drill, baby, drill. Find more gas, lower gas prices at the pump, lower inflation. Is that the way? Is there another way?
Well, I'm going to be contrarian here on this one, David, because isn't it remarkable that the shale revolution largely happened under Barack Obama? And now under Joe Biden, who arguably is the most anti-hydrocarbon president in American history, oil and gas production in the United States is higher than ever. So, we can make this argument, we need to drill, baby, drill. Well, what else is Trump going to do? I mean, I talk to people in the oil and gas industry. I know a few of them. They say, hey, business is great. We're making money here. And so now, what are the reasons for this? Well, as I mentioned, technology, but also the Permian Basin. I mentioned this before. It's probably, I'd put $100 bill on the table today and say there have been more oil and gas wells drilled in the Permian Basin in Texas and New Mexico than any other province in the world, any comparable size area on the planet. And yet now it's producing more oil and gas practically than any other province on the planet. I think the latest numbers on oil production, 6.4 million barrels a day, 18 billion cubic feet of natural gas, as I said, more than Canada. It's just incredible. Now, it's not free. It's not cheap. There's a cost, both in environment, there been, seismicity in the region. But what we're seeing is that, in fact, we're not running out of oil and we're not running out of natural gas. And the U.S. has a price advantage on natural gas in particular over pretty much every other country in the world.
Robert, have you looked into the concept of peak uranium? So it's arguably not an infinite resource, right? It's,
sure.
At some point we may run out. Have people looked into this?
It's a really interesting question, David, and I'm not going to pretend to be a mining expert, but I'm fascinated by the issues around hard rock mining because it's fundamentally different than oil and gas. So oil and gas, you have a drill rig, you put the bit down in the ground, you turn it sideways, and then you pump a lot of sand and you get oil and gas. It comes back up to the surface under its own pressure generally. So you have to pump it eventually for the liquid hydrocarbons. But hard rock mining is different because it's really a mass and volume problem. So I would suggest it's not necessarily even just the uranium supply question. It's also copper. So, you're an economics guy, finance guy. Surely you've been watching the copper market, and there have been a ton of bullish calls on copper. But yet copper prices have been flat or even falling lately. Why? Because of potential demand, cooling demand in China. But I think the uranium discussion, that's really interesting. And Canada is incredibly fortunate to have some of the best uranium deposits in the world. But I would make one additional point. We don't know. I mean, uranium prices have skyrocketed in the last couple of years. I don't know what those numbers are just off the top of my head, but they've been, they've gone up dramatically. But have we discovered all the uranium deposits there are? I would argue we haven't. And so, price is an incredibly powerful incentive for miners. And so, will we see a uranium shortage? Well, yeah, I'm not so certain, but there's clearly a lot of bullish calls on uranium demand because of the resurgence in nuclear energy. And again, this is another area where Canada is going to lead the world because your CANDU reactors, you can almost just take that uranium ore out of the ground and just throw the dirt in the damn reactor and it works. I mean, it's an incredibly effective technology, the CANDU reactor.
So what do you think? Let's close off here. What do you think
Sure.
is going to happen to the WTI oil price?
Well, now listen, Mr. Lynn, if I knew that, you're in Vancouver, I'd own all of the turnaround, all those buildings behind you, I would own all of them. If I could make a good call on oil, boy, oh boy, would I ever be rich. I'll beg off on that one. If I only knew, I would tell you, believe me. No, I wouldn't tell you. I'd keep it to myself and I'd get even richer than I am now. I could afford more than guitars. I'd buy buildings.
All right, let me rephrase the question. Perhaps studying history will give us a
Sure.
glimpse into the future. Why do you think oil has peaked around 120 last year, or 2 years ago rather, and has just been coming down and trailing sideways?
Well, it's always about supply and demand, and that is we see as prices go up, we see demand cool a little bit. With the price comes down, we see demand go up. But remember, demand has been really robust. In fact, I think it was in last month or the month before, set a new demand record for oil here in the United States. So despite we talked about EVs earlier, people may be buying EVs, but they're sure driving a lot, right? And they're driving their older internal combustion engine vehicles. So, but I'll add this one quick point. Remember that you and I, you're in Canada, I'm in Texas. We live incredibly fortunate lives. We can't really use that much more energy. I mean, maybe if we bought a private jet or something, we could use more oil or whatever. But remember, there are 3 billion people in the world today who use less electricity than what's consumed by an average kitchen refrigerator in the US. So this global, I will say lower class or global growing middle class, they want to use more energy. Why is power demand in India climbing so rapidly? Demand for air conditioning is one of the key ones. So, oil is just one of these commodities globally that's going to continue to be in demand. I'm very bullish. You didn't ask this question, but on global natural gas demand, we're seeing this growing LNG market, which has really matured very rapidly. Will it be profitable? Well, for some, but the U.S. is now the most important provider of LNG into the European market. So this globalization of natural gas is one of the other big macro themes of the current era, and I think that's going to continue to go on.
I'm guessing you're bullish on uranium as well, are you?
Absolutely, yeah. Because it's just clear now the push for nuclear energy in Eastern Europe is on. Estonia, Romania, Poland, France has said they're going to build out more nuclear reactors. The same with the Brits. The Ukraine war has changed the energy geopolitics in that part of the world, and those countries are realizing they cannot rely on Russian gas, so they need nuclear.
Here's the thing. I talk to a lot of miners on my show, and
Sure.
overwhelmingly, they all say, miners of either silver or copper or any other base metals. Overwhelmingly, they say a couple of things. First, the time to production of a mine is now higher than it used to be.
Yeah.
Permitting times have gotten longer. It's now more difficult to find discoveries and take those discoveries into production. And so you're just take from mine and discovery into production. That process could be up to 20 years depending on the mineral, depending on the jurisdiction. There's going to be a shortage of critical minerals, is what they tell me. If we assume that the demand for these critical minerals will increase exponentially for the reasons we've talked about in the last 30 minutes. So if we can't meet this demand, what do? Do we just abandon the AI boom? Do we just abandon the EV targets? Do we just abandon this, new age of electrification?
Well, I don't think abandon is the right word, David. I think it's just going to simply be a slower development. It's interesting you talk about, that if we have a shortage, well, okay, everything is rationed by price, whether it's Rolls Royces or Rolexes or, you name it. We have the commodity, whatever it is, the service is rationed by price. But I think this is one of the things in fact, I'm speaking in Chile at a mining conference in October. So I've taken a very, great interest in hard rock mining and what we're seeing. But there was a S&P Global recently reported. I just looked this up because I wrote about it, as I said, in June in the Financial Post. Here's the quote. The average mine lead time continues to trend upward, reaching 17.9 years for mines coming online in 2023, compared with 12.7 years for mines that started up 15 years ago. So, yeah, that is very long lead time. So could we see higher prices for base metals? I mean, that a lot of people are making that call, and I understand why. And the copper part of it to me is fascinating, and I wish I knew. But Robert Friedland is is one of the most interesting guys in that area. He's with Ivanhoe Mines. I think he's a Canadian guy, isn't he? Or is he based
Yeah,
in?
he is. Yeah. And
Yeah.
he said regarding copper, he said there's going to be more demand for copper in the next 20 years than the last 10,000 years combined. That's what he
Yeah.
said. So,
Right. So there are a lot of
um,
bullish calls, but is price going to ration the supply? Well, yeah, of course, but what will that price be? And this is the other part. I mean, again, you're a finance guy, investing guy. I was when I was in Vancouver just a few weeks ago. I met with a guy who's also in the mining business, and he talked about this ratchet where, okay, well, so the miners are going to have to move more material, right? They're going to have to move more, particularly copper. They're going to have to move more ore. They're going to have to pulverize it more, treat it more, so their costs are going to go up. Well, is that higher price going to mean they're more profitable, or are just their costs going to go up, right? Is that it's really going to are the miners going to make more money, or are they just simply going to be, in the squeeze between higher investment costs and trying to keep up with keep their mines operating?
this has been a fascinating talk, Robert. Thanks for coming on the show. We'll follow up with you more, of course. Before we go, tell us a little bit more about your book that came out a couple of years ago, A Question of Power, Electricity and the Wealth of Nations. You have it right there. You can show us the cover.
Sure.
I'll put the link down
There's
on
the
Amazon.
book. The paperback came out about a year ago. I've done 2 documentaries. You mentioned the first one, which came out in 2019. Behind me is the promo for my new docuseries. It's called Juice, Power, Politics, and the Grid. It's a 5-part docuseries. Each episode's about 20 minutes. It's free. It's available on YouTube. Did I mention juicetheseries.com? I hope I mentioned juicetheseries.com, David. If I didn't mention juicetheseries.com, then please remind me to do so. And then I'm on Substack. I'm right almost exclusively now on Substack. I mentioned the piece I wrote for Financial Post, but robertbryce.substack.com is where I'm publishing most of my work.
We'll put the links in the description down below. Make sure to check that out. Thank you, Robert, for coming on the show. Appreciate it.
It's been a real pleasure. Thank you, David.
Thank you for watching, and don't forget to like and subscribe.